Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Monday, February 13th. This will be a technical analysis breakdown, so if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple quick clarifications. Number one, the price you see over here will be moving around and changing, and the candlestick you see right there will be moving. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, XPON, and this thing has made a monster move today. And as I speak, last 30 minutes, you can see that the party seemingly is getting better and better here. Market's open for another about 20 minutes. So potentially maybe this thing doesn't break to new highs. We'll have to see how things play out. But point here being is the first question that you're going to want to ask yourself, because by the time this goes live on YouTube, is take an inventory check of, well, where's the price at relative to $3.65? If you are answering the question that the price is above $3.65, then that is telling you that a breakout has occurred, which brings about and prompts a very exciting question where you would be saying, wow, is this the start of a much bigger breakout? Because a breakout has occurred, so is it the start of something much bigger? But even if it doesn't, even if it closes down below 365, you still get to ask a very exciting question. That question is there some sort of breakout that's going to be happening next week? Because again, last 30 minutes volume is coming back in, nice green candle. So regardless of what question you're asking, the common denominator is both are exciting questions. So keep an eye on 365, as in my mind, that'll be a very key level to watch moving forward. As far as pullbacks are concerned, so if you like to play more so pullbacks, interesting pullback level right there at $2.90. But as I speak right now, the key dynamic here and key overall pattern, I would classify as a bull flag pattern. So if you like stocks down below $10, you like bull flags, definitely keep an eye on it. Next one, VLON, and this is a little tricky to talk about because there's a lot of perspective that goes into it. What do I mean by that? Well, if you're a day trader, flipper, scalper, whatever you want to call yourself, and you were buying up there and your plan was to buy and sell within, 19 minutes, well then yes, from that perspective, the chart now looks really, really bad because there has, without doubt, been a very deep pullback. Now, if you care about the big picture of things, there's no doubt about it. The price has pulled back, and I'm not saying this will occur, but just for example's sake, let's say the price pulls back even more and comes down to this former breakout area right there at the 48-cent mark. Again, not saying it will, but comes down to 48 and then starts, curl back upwards. What would you still have from the bigger picture point of view? Well, you'd still have a set of lows there. You'd have lows there. You'd have lows down there. And if you envision those as stair steps, what do you have? Well, from, again, emphasis on big picture, from the big picture, you'd still have stair steps progressing in the upwards direction. And that's what it's all about, assuming you care about more of a broader scope of things. So yeah, no doubt about it. And I realize that if you're a day trader that bought right there, you definitely don't care about these stair steps. But that's why I'm trying to make the distinction that depending on your viewpoint is going to depend on how you view this chart. So yeah, big pullback right now, but overall the chart does still have plenty of opportunity to build a higher base. So let's see if they can get that job done or not next week. Next, SQL, and once more, one of those perspective things, because yes, if you're a day trader, scalper, and you bought right there, wanted to sell in 19 minutes, the chart's looking really, really bad for you. But what makes this interesting is the price is now starting to pull back and approach this gap close location, which does not mean that there will be a bounce down around this dollar mark, but it does make it a fascinating area, and it does make it an area where there's some logic behind thinking that it could very well bounce. Now, let me be very clear. That doesn't mean that it will bounce, but nobody could accuse you of saying that a dollar is some random area and you're a degenerate because you're just randomly picking areas. No, there is logic that goes behind it. So guaranteed, no. Logical, yeah, absolutely. So if you like to play these pullbacks where things are looking pretty rough, because in money situations, when everybody gives up, when everybody says, oh, it's game over, this is the worst thing in the world, that's when prices tend to all of a sudden start to change around. And a dollar is one of those areas where, technically speaking, could very well be that area. So like I said, if you like to play this price range and like to play these general premises of setups, then I'd definitely keep an eye on it. Next one, HILS, and I put this one strategically because same exact idea here. So I'm not going to sit here and, repeat myself, but same general idea. No doubt about it. Big pullback here. No doubt about it. Things are looking pretty rough. But as an area that could logically provide some support and get a bounce right down there around that $1.40 mark. You have this as a former area of resistance. You have that 50-period moving average, the purple line right around that general area. So again, does that guarantee that it'll bounce? It does not. Is it plausible? Is it logical that it could? Absolutely. So again, same general idea. If you like to play these sorts of scenarios, then definitely keep an eye on this one too. Next one, AMC, and the brutalness continues. And let me zoom in here real quick. I mean, just such a tease. Such a tease. Last 30 minutes there on Thursday, you can see nice and green, looking great. And then just like that, gap down and then continue to just work its way lower and lower. So yeah, just no mercy at all on this one right now. It's just been absolutely brutal in terms of these price movements. But so just let me get rid of that. But basic rule in charting, when levels of support are broken and closable, they tend to act as resistance. So moving forward, if there is any sort of attempted turnaround, that first key level to watch closely will be right up there around $4.95. But the reason I have to squeeze things down so much is because we're having to go back way into the chart's history now to find next potential areas of support, with that next area being right there at $4.55, which is coming from back around here on the chart, which just from a date perspective, when was that? That was back in basically mid-January. So it's literally been weeks upon weeks since the price could potentially be revisiting those areas. So 455 important, because if it drops below there, now you're starting to enter, into, areas of the chart that it's not been seen for, that much longer ago. And assuming you're along, that's not exactly a sign of true power. So yeah, again, if there's any sort of bounce, 495 key level resistance. But if this continues on down, then 455 going to be one of those areas where definitely the price could bounce. But if it doesn't, that would just illustrate that the bears are not only remaining in control, but gaining that much more control. Real quickly, wanted to pause and personally invite you to get signed up for this free live online training that I'm offering next week. So if you've been enjoying what you've seen, you want to learn more about this tool, how it can and should be used to build consistency and to manage risk, certainly get signed up for the free live training. If you're watching on YouTube, there's a link in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then certainly get signed up for the free live training. Next one here, TSLA Tesla, and some updates need to be done after the bigger pullback here. Granted, as has been the theme, yeah, it's pulled back, but when I squeeze things out, you'll see that within the bigger picture, the chart is still very much so in an uptrend. So you have to keep that in mind. That is certainly the broader context here. But in more of a near-term context, I'm going to go ahead and just get rid of that line now. And as I just did with AMC, basic rule and levels of support are broken and closed below. They tend to act as resistance. So more in the near term here, if there is any sort of attempted bounce, then that 203 mark is certainly going to potentially be a problem. But also you want to keep an eye on that purple line there, the 50-period moving average, right now valid at, let's just call it $200.80. In terms of levels of support, so if this pullback does continue more, the level that I'll be curious about as somebody that watches Tesla on a day-to-day basis, going to be right down there at 189.50. You can see, my ugly mug is covering up some of it. There we go. But you can see the history of the chart. Support, support, support. Does that mean that it'll provide support again? Of course not. But is it logical that it could provide support and could provide a bounce area? Absolutely. So if you like to prefer more so pullbacks, then that 189.50 is certainly a very interesting level. But again, just to reiterate, assuming you care about the big picture point of view, then yeah, Tesla pulled back today, but overall the chart is still in an uptrend. Next one here, LYFT, and the premise here is quite straightforward. LYFT, I'm not going to say it's the most popular stock, but it's definitely a popular stock in the sense of a lot of people have heard of the company LYFT. And then you have that combined with the fact that this thing got absolutely destroyed today. And then you combine that with the fact of sideways price movement. And why does sideways price action matter? Well, it at least implies that maybe, just maybe, this is some sort of bottom compared to this. Let's say the price was just dropping, and then I am sitting here saying, hey, it's looking like this could be a bottom. You'd be completely justified to say, what are you talking about? That makes no sense. The price is literally still dropping. But that's not the case here, right? It's at least started to go sideways. Again, does that guarantee a bottom? No. But is it plausible? Is it logical that it could be a bottom? Absolutely. So when a very popular stock that's been beaten down in a severe way could be at a bottom, you can get some very nice bounces. Even if it's just a dead cat bounce that, let's say, just goes up to here before rolling back over. Percentagely, I think that's a word I made up. But from a percentage standpoint, that could still be a very worthwhile trade relative to what was being risked in the first place. So again, is there a bounce coming? I'm not making that claim. The only claim I'm saying is that, you know what? Very popular stock has been beat down. It's suggesting that maybe it's done being beat down via the sideways movement. And if this thing does decide to bounce, then you could be looking at a very nice risk-reward scenario. Next, NIO. Overall, rough day, but to give some credit where credit's due, when you factor in that at one point the price was down here and now the price has bounced all the way up there, a good, solid quality bounce, but that does lead to the question of, okay, yeah, but is there any sort of true power behind this bounce? And I have no idea, but by answering this one question, we can make that easier to see. And that question has to do with $10.20 based on the premise of bounces that are truly strong bounces are going to, keep on bouncing. In other words, they're going to show signs of progress. No bounce is going to go straight up. But okay, Clay, well, what would be the quote unquote sign of progress? 10.20, because let's say the price comes down here, bounces around, and then starts to work its way back upwards. What would that be doing? Well, that would be putting up low right there. You'd have that low, and you would have a higher low, which allows these stair steps to be built. And that's what a truly strong bounce is going to do. It's going to build some stair steps. So nothing needs to go straight up in order to be healthy. But from a bullish standpoint, in order to be healthy, you are going to need some upward stair steps, which again is why that 1020 mark is important. As far as levels of resistance, continue to watch that purple line there, 50-period moving average, which is right now valued at $10.58. So no doubt about it, to give credit where credit's due, nice bounce today. Does this bounce have true strength behind it? Let's see if some stair steps can be constructed. Next one, PLTR, not a good day at all. Not because it was red, but from a technical standpoint, because the price came down to that pink line and then just blasted down through it. And that pink line on my chart denotes the very famous, the very well-known 200-period moving average. So that's just not a good sign when that 200-period moving average is being not only broken, but I mean, it's not like it was even close. It broke, and now it's way down here. So again, going back to the whole idea of when levels of support are broken, they tend to act as resistances. So if there is any sort of attempted bounce, then $7.80, former key area of support, now becomes a key level of resistance. And as far as supports, let me squeeze things down just to bring up a bit more context here. So the near-term level is just simply where the bleeding finally stopped today, and that was right there at $7.45. If $7.45 does not hold up, then the next key area of support after that is actually not too far away right there at $7.35. So if anything, maybe it would be smartest to just call this a support zone. So as long as the price stays within this general area, that would be a good sign. But yeah, if the price comes down there and just blasts through the support zone, that would be a sign that not only are the bears in control, but like I said previously, they would be gaining just that much more control. But overall, definitely the chart is starting to show some very big kinks in the armor. You know, at one point right there, yeah, it's pulling back, but still you have kind of a bull flag pattern. But now the price is even down below here. So that's where things start to get shakier and shakier. And even if, and you know, especially if the price breaks through that support zone. So keep an eye on it. It's quite important. Next one, TQQQ, which is an ETF that measures the NASDAQ. So if you believe that the NASDAQ market as a whole is going to rise, then this one will also rise. The difference here being this allows you access at a much lower price point, which makes it a very popular ETF. Been tracking this one very routinely. So nothing new here from a resistance standpoint. That trend line that I put into play several days ago is still in effect. Kind of relevant, not really, because the price isn't really that close to it. But really, even before you talk too much about that trend line, the price is first going to need to worry about that 50-period moving average. And actually, I'll take a step back. And even before you worry about either of these dynamics, the first dynamic that needs to be focused on is this level right here at 24.25, which again, going back to that idea of when levels of support are broken and closed below, they tend to act as resistance. So yeah, quite a few areas of resistance now that the price will have to overcome if there's going to be any sort of turnaround. But the good news here is that unlike, I can't remember what ticker symbol, but the price came down here to that pink line, and the pink line, again, that 200-period moving average, has done a fantastic job of providing support. So at this point, it's good to see that the price didn't come down here. Was it PLTR, I think, where the price came down to the 200-period moving average and then just kept on going down and down? That's the exact opposite that's happened here. So again, does that guarantee that a bounce is going to be coming? Of course not. But does it become a whole lot more plausible? Does it become logical to think that because this key moving average is holding, that could very well create some sort of bounce? That's certainly a valid thought process to have. But also moving forward, if the price does just roll back over and then starts to break and come down through that 200-period moving average, that would be a sign that the NASDAQ market as a whole is starting to have some very serious problems. But that hasn't happened yet, but it's certainly dynamic that should be watched and monitored next week. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the free training. Like I said, it'll be next week, Thursday, February 16th at 7 p.m. Eastern Time. So I hope to see you there. As far as these top 10 videos are concerned, do two things for me, please. Hit that like button, leave a comment. Tell me what you're traded today. Tell me what you're watching next week. Those two things communicate to me that you enjoy. And as long as I know that you are enjoying, I will continue to put in the required time and effort to get these videos out to you. So again, hit that like button, leave a comment below, and definitely go get signed up for that live training. Thanks for watching and have a great weekend.